you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and here with me today is Lewis Grant, manager of the Hermes Global Equity Fund. Hello Lewis.
Hi there.
So we had you in the studio last year and we talked about how bullish you were on US. Things have changed slightly now and you're moving away from the US into other parts of the world, aren't we? So I thought we could talk about why you was perhaps moving out of the US and where were you putting that money?
Sure. Well, we follow a very systematic approach to investing. So we really focus on the numbers and the data and the facts. And we try and remove a lot of the emotion from investing. And what the numbers are telling us is that the US is looking expensive. And we're not surprised with this. With such a strong US dollar, we're just seeing a lot of challenges there. And we're not expecting to see the growth that we've perhaps seen historically. And we're not expecting to see the same sort of growth that we're seeing in Japan. And Japan is our current top pick. So we're very optimistic about Japan for three main reasons. So firstly, on a valuation basis, Japan looks cheaper than the US. So the TOPIX is trading at about 15.5 times forward earnings. The S&P 500 is more like 17.5. But the earnings growth expectations in Japan are much higher than the US, more like 15% over the next year. The US will be high single-digit growth. The second reason is based on sentiment. It's based on how investors are feeling. So we're seeing a lot of inflows into Japan, both domestically, from the Bank of Japan with its huge stimulus plan, as well as from Japanese pension plans who are increasing their allocation to domestic equities, but also from international investors who are starting to invest more and more money in Japan. It's a very good sign for investors. The final reason, though, is the most interesting from our perspective, and it's really about a cultural shift in Japan. It's about an increased focus on corporate governance. Now, at Hermes, we have a real focus on good corporate governance, and we've actually done research that has shown that companies with poor standards of governance have underperformed their peers. And historically, companies in Japan really haven't cared about governance. It has been one of the laggers of the developed markets. But that's changing. And this year, there's a new corporate governance code coming into effect in Japan. And we think if you can capture those companies who are going through positive change, they can really unlock shareholder value. And for long-term investors such as ourselves, that's a great opportunity.
I went to Tokyo recently and did a report for our readers on how Urbanomics is actually incredibly supportive, not just of the economy, but of the stock market. Bringing it back to how you were saying about valuations looking more attractive in Japan and in the US, if you don't mind, I'd just like to pick apart that point. You know, the US has looked stretched for a while. What's different now than 12 months ago? Because we have had, you know, gains in the last year.
Absolutely, we have. And I think the things that have really changed, as I say, is firstly, the strong dollar. I think we're just heading into earnings season now, and the strength of that dollar is really going to test a lot of those multinationals. I think it's going to be a really interesting few weeks as we see and we can actually quantify the effect of the strong currency. But also, this new corporate governance code is a game changer, is a cultural shift in Japan. 12 months ago, we didn't see that actually happening so quickly, but now we do, and now we're really bullish.
Let's have a look at Europe then. I know among the Eurozone countries, you're particularly fond, if I may be that strong, of Spain.
That's right. I think Europe is relatively attractive compared to the US. I think valuations are better, but Europe has obviously got the Greece issue. There's still a shadow across a lot of Europe. Where we're seeing value within Europe is looking at companies and countries who've gone through very positive change, who are now starting to see the benefits of their reforms. Spain is a great example. They put a lot of very, very difficult reforms in place, but now they're seeing improved macro data that's actually making this clearer that it's worked. Investors can actually have some confidence that Spain has turned the corner, and we're a lot more bullish now.
And that, though those measures presumably were to prop up the economy, but they have had an effect on the stock market.
They absolutely have, and they will do going forward. It gives us a lot more reassurance that we can invest our money there much more safely, and that the companies are actually now sound investments, which we weren't really sure about 12 months ago.
Lewis, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.